and welcome to the Small and Mid Cap Show. My name is Rucha Somaya, and today we are going to talk about eClerx Services, which has reported its Q1 FY25 results. But to talk to us more about this, we have the CFO, Mr. Srinivasan Nadadhur. Welcome to the show, sir. Thanks for taking out the time. What is your first take on the results that came out yesterday?
So we are pretty pleased with how Q1 has turned out for us. So revenue, as you mentioned, came in decently. Margins were down. However, this is not unusual for Q1 in any quarter because we just paid out our wage hikes. And that's a major component of the margin drop. We've also invested in hiring business development leaders in our client geographies. And that's the other major contributor to the reduction in margin. So overall, we are fairly pleased with the results, and we think there is significant growth potential given what we see of the deals that we have signed in the quarter, plus what we see of the pipeline that we have.
Right. As I can see, the margins actually took a hit, which came in at about 17% versus 21% in the last quarter. So you also attributed this to the wage hikes and senior management hires that you made out in the current quarter. So how do you expect the margins to fare in the coming quarter? Do you see second quarter to be subdued as well? Is any impact of wage hikes going to come in the second quarter?
There will be no further impact of wage hikes. In fact, we expect margins to increase from Q2 to Q4 onward, from Q2 to Q4, as happens every year. And broadly, the reasons are that we are able to replace attrition with staff at the bottom of the pyramid. So we do expect that to continue this year as well.
Right. Right. Okay. Moving on to the geographic breakup, North America, which contributes 75% of the revenue, had pretty decent growth, about 3%. But do you expect this growth to continue? And also talking about Europe, largely muted growth over here of about 1.5%. So how do you expect these geographies to pan out in the second quarter and the rest of the year?
So we see a lot of the pipeline that I talked about is in fact in North America. So we do see that North America will continue to remain strong for us. Most of our luxury clients are based in the Europe region, and we see some softness in that subsegment. So going forward, I think the situation is likely to remain similar with North America doing well and Europe being subdued.
Right. Okay, but are you also seeing green shoots in the financial markets, is what you had mentioned, but financial markets was largely subdued for most of the IT companies even in the last year, and most of the IT companies, even as you mentioned, are talking about green shoots in financial services. So do you expect financial services to be the growth leader going ahead?
Yeah, we see most of the pipeline that we see currently is in financial services. That has been the growth leader for us in Q1 as well, and we expect at least in the next couple of quarters that trend to continue.
Okay. So let's talk about the demand environment. How do you expect the demand environment? Are clients still seeing deferral or even cancellation of deal wins? You know, the problem which most of the IT companies had around the last year. So how do you expect the deal wins to foray? Are you seeing longer time leads in closure of deals?
In one of our businesses, that is a digital business, we see that delays in deal closure. We see that larger deals especially are taking time to close. So yeah, I would say it's not secular across the board, but we do see it in pockets.
So what kind of deal size are you looking at, and in what geography? As you mentioned, Europe is likely to be soft, largely because of the luxury segment. But as you mentioned about the longer lead times for closure of deals, so this would be largely in which geography or which sector?
This is in our digital business, and it is across both Europe and North America.
All right, got that. Okay, so again, as coming back to the demand environment, do you expect clients, or are you seeing clients still tight on their budgets and not spending on transformational deals, or are they still going on for vendor consolidation deals?
We have not seen widespread trends in either vendor consolidation or a reduction in transformation. as I think, depending on the value proposition, some of these deals do continue to get signed. But as I mentioned, it does take a lot of time. It seems to be taking time, especially where the ticket size is larger.
All right. Okay, got that. Cool. Okay, moving on to talk about the business process as a service segment, that is the BPaaS segment. So talking about this segment, it constitutes about 21% of the total revenue. However, the revenue declined about 10% on a quarter-on-quarter basis. So are you seeing weakness over here? Again, demand environment not pretty great over here?
So there is some seasonality because some of the work that we do is in the KYC segment that contributes to that BPaaS revenue. And usually Q4 is the high water mark for KYC transactions. So there is some seasonality impact. Having said that, it is also somewhat of a maybe small change in direction from the new CEO. And I expect that maybe what constitutes BPaaS for us will probably emerge, and what the stable direction for that may probably emerge in 2 or 3 quarters from now.
So you still expect 2 or 3 quarters to be muted for BPaaS?
Yeah, I would think so.
Okay, right, got that. Okay, moving on to your guidance, the EBITDA margin guidance, the adjusted EBITDA margin guidance of 24 to 28% for FY25. Do you still stick to that?
We are seeing to that.
And what would be the margin levers? Because as you said, wage hikes will not come into Q2. So Q2 likely expected to be good in terms of margins.
Yeah, I think we should see an improvement sequentially in margins. Pipeline conversion. So for us and for most IT companies, revenue growth is the single biggest driver for improvements in margins. So as long as we are able to convert and deliver well, that should lead to margin improvement as well.
Right. Got that. Okay, so in terms of revenue growth, can you give any guidance for FY25?
So we don't usually give guidance, but our aspiration, maybe we have stated this earlier as well, is to try and hit double-digit growth, low double digits. So let's see where we end up.
Right, but again, moving back to margins, as I see your on-site offshore revenue is already at 20 to 80. So what kind of margin levers, again, reiterating back to my previous questions, if you can, pick out any particular margin levers that you expect to, help sustain those kind of margins going ahead?
Maybe an improvement in utilization is what we expect, plus more growth offshore. Those will be the two major levers.
Right. Right. Got that. Thank you so much for taking out the time for NDTV Profit. It's time to slip into a short break, but on the other side, we have a lot more. Do stay tuned.